right. Sorry guys for that delay. Just getting started now. All right. We're still on along from this London session. Well, can't really say London session, but between London kill zone and the New York kill zone. Earlier this morning, inside the tape reading chat, if you were able to make it, or if you were asleep, that's perfectly fine too. We took a short once we closed below, which one was it again? This bullish share value gap right here. See that we kept holding support here once, and then we came back to retest it a second time. At this point in time, we were already thinking, this is looking like big time seek and destroy. We take out lows, we move back to take out highs, move back down to take out the lows again, move all the way back up to take out the highs, reject from the new week opening gap right here, a new day opening gap. No, it's new week opening gap, right? It's a new week. And after taking out the buy side, so at this point in time, well, of course, with hindsight, you'd be thinking, no way, I would never be thinking that's gonna reverse and go back up here. But that at this point in time, I think it was in the cards. It was on my mind, that's for sure. So I really wanted to see some more confirmation that we are going to continue lower. And we got that confirmation right here. Once we closed below our bullish share value gap, that volume imbalance was also a nice confluence. We entered the short. I mean, you had to be right on the chart in order to catch that trade. Very short notice. Close below. I mentioned that's the confirmation that I was waiting for. You can check that out on a tape reading chat. Talked about it right here. We still have 9 minutes until the New York Open, so let's just recap London here. Right here, close below the fair value gap. We retested it. That's the confirmation I have been waiting for. Targeting sell side. We got the retest right here. At this point in time, we already noted it down as a inversion fair value gap, and that's where we ended up delivering lower. Initially, also was interested in a bearish share value gap, but we never got back into it. At least only as on NQ, we actually retraced into that 3:55 a.m. bearish share value gap. But we used that at a later point in time. So we continued lower, we hit that sell side target, and we had this old 5-minute time frame unfilled bullish share value gap right here. It's also overlapping with this inversion fair value gap. We dropped into it. That's when I secured most of my profit. I still had a little runner going, which eventually got stopped out at break even here. But yeah, could have secured 10 points in profit on this little short. But immediately after filling in this fair value gap, we bounced back. And we bounced back very aggressively. So within almost no time at all, we already invalidated the first two lowest bearish share value gaps and also this unfilled bearish volume imbalance here. All what we had left was this bearish share value gap right there. After the short, the successful short during the London kill zone, it's already 4:30, getting closer to 5 a.m. right here, the end of the kill zone, and my timing window for a London setup. Wasn't really interested in taking a continuation trade, even though I considered taking a long of this bullish fair value gap here because it's overlapping nicely with the inversion fair value gap right there. But I decided not to, and I kept on waiting to see if there's a potential setup. I had some other things to do before I went to the gym, and just before I left to the gym, I eventually saw the retracement into this bullish fair value gap, volume imbalance, inversion fair value gap right here. So there was lots of confluence, and we were already discussing the potential accumulation right here, where we just go sideways. This being the potential low of the day, the manipulation move, with the quick reversal back inside of the range. So the idea was already on our mind that we could reverse and take out the Asia session buy side liquidity pool. Yesterday on the weekly outlook that I shared, I also pointed out that I'm going to be using this 1 hour time frame bullish fair value gap. And as we can see on the hourly time frame, we kept on respecting it. Yes, we dropped below, sweeping sell side, but that's making me even more confident that we're now going to, that we now should have an easier time to target at least internal buy side, and then maybe even some more buy side like Friday's high and Thursday's high. So this could potentially be that low of the day. And yeah, during the New York AM session, we could see that expansion based on the accumulation, manipulation, trapping traders short, reversal setup. So that's that 1 hour bullish fair value gap. We use this inversion fair value gap for our short. Let's leave that right here. We don't need that. We don't need that. We retrace, and this would have been a market structure shift here because we formed a high, higher low, and higher high. Still 5 minutes left until the New York Open. We closed below, but we didn't leave behind that bearish fair value gap. And we already had that idea in mind. We already also caught the short, so no reason for us to chase anything. And once I saw this move to the upside here with that new hourly candle, so it's 5:55, 6 a.m., we drop into the bullish fair value gap, paired with the inversion and all that stuff. We even retrace to that lowest inversion and immediately shooting out of it again, leaving behind a new bullish fair value gap. That's why I decided to take a low risk entry with a very tight stop. Stop just a little bit to cover spreads on the funding pips account below this low, targeting that London buy side liquidity. I'm still in with 0.5 lots, going for the Asia buy side liquidity pool. And that's a total of 18 points. And so far, after we retested all these inversion fair value gaps, bullish fair value gaps right here with the fake market structure shift, we kept on respecting these bullish discounts very nicely. So I'm just going to draw them up here very quickly. The first one continued higher, pushing through that last bearish fair value gap of this entire price leg to the downside from this high all the way down to the low here. We close above it, getting rejected at the midnight level. Now that we close above it, we actually use the inversion fair value gap now as support, paired with the bullish fair value gap. Price continues to deliver higher. We left behind a new bullish fair value gap, and we actually started to disrespect it. We also closed right here, one time below this low. Was a little bit worrisome, but fortunately I was working out at that time and I missed that. My stop loss was protected already at break even, right around the entry. So I really had nothing to worry about. And from here on, we just swept the low. We can also see that once we closed below this low right here, we immediately opened up. Let me zoom in here with a bullish volume imbalance. So it would be that gray area where we can still try to hold on to the trade and see if this inversion fair value gap and bullish fair value gap still holds up, because we still didn't close below it. If we would have seen the close below, that would have maybe been a little bit worrisome, but stop protected at break even. Just a in-between session trade, I would say. Even filled this bullish fair value gap here. So going forward, we continued higher, taking out that London buy side, leaving behind a bullish fair value gap, delivering higher one more time. And that's where we are at right now. And in 1 minute, we get the New York Open. We have a set of equal lows right here. So a sweep would have been nice to see here. Also, look at the VWAP, how nicely that has been respected today. This morning we talked about price having a hard time closing above the VWAP. We closed back above it, and then we used it as support. Let's see if we can run into buy side first, completing the pattern. And if you guys have any questions after this entire recap where we're at right now, feel free to ask. It's only us today on Discord. 20 seconds to go before the New York Open. Equal highs and equal lows now. Right, we're moving to the upside. The equal highs have been cleared. Let's see if we can also close that way. Take a quick look at NQ. NQ already cleared Asia session buy side. Already delivered into that target. Let's see if we find our highest bearish fair value gap. That's what we're dealing with right now. And above that, there's a tiny weeny little one. But I don't really care about these one tick fair value gaps. Let's see if we can hit the profit target first. Yep, we're running for it. Let me take another partial. Just securing what's already mine. Modify position and trail the stop loss. With us in profit. I mean, yes, we could have also entered just before the New York Open using this bullish fair value gap here, but I think that would have been high risk because of these equal lows here. So Asia buy side has been cleared. Let's see how we're going to close on this 5-minute candle. Still in a portion of the trade. So make sure that if you're not located in Europe or somewhere where you're able to comfortably trade the London session without having to wake up in the middle of the night, I really don't recommend that because you want to perform at your best, and that's usually not in the middle of the night when your alarm rings because you really want to trade that London session. Earlier in the VIP chat we talked about the reason why we initially started trading or even considering seriously getting involved with trading and the entire aspect of it. And I don't know, but I think that most traders kind of forgot the reason why they started trading. For me, it definitely was to have more free time to do the things I really love doing. But we kind of forget, and eventually during our first years end up glued to the charts, sitting in front of them all day long. So I don't see the point why someone should wake up for the London session just to be trading it. There are plenty of opportunities laying around during the New York AM and PM session. So let's see how we're going to close. 1.5 minutes left. Take a look at NQ. NQ is also following. What does it look like on a 15-minute? So a weekly outlook, I'm not sure. Do you guys watch the weekly outlook? I mean, it's nothing bad. I mean, I don't judge you if you didn't watch it, but it would make sense to, I don't know, at least catch up with it it's hard for me to really, on a higher time frame basis, create a weekly outlook. That's why towards the end of that video, all we talked about really was that hourly time frame to get a rough feeling of what we could be looking for heading into tomorrow's London and New York session. And all we really focused on was, this bullish value gap that I mentioned already at the beginning of the stream. Because all we did here last week, starting from Tuesday, Wednesday, Thursday, Friday, was lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then we actually broke our lower high here. So this theoretically could be viewed as a market structure shift right there, leaving behind that bullish value gap. So if I would have seen price not doing that immediate bounce here of that lowest discount that we had available on the 5-minute time frame, I certainly wouldn't have had that confidence to keep on holding onto that trade. We have a very nice candle close here. Could be getting that Monday expansion rally right at the New York Open. We want to keep an eye on NQ. That's usually what I like to do if they both run. If NQ hits, if NQ should hit that previous day's high, I at least want to know. But I don't have to look at it right now. Buy side liquidity taken. Asia buy side taken. London buy side taken. We use this to go short. This to frame the long. Keep on respecting bullish value gaps. Let's see if we create a bullish value gap right here at 9:30. But yeah, like we say so, or like we said it on Friday where we did the tape reading session, we also had a pretty big bullish value gap here. Let's see if it were to 5 points, that would still be acceptable. But also tricky that now we're back at the high of the day. Usually you don't want to buy in a premium unless you really think that we're going to get a explosive rally or continuation further to the upside. But you would have to have a very strong gut feeling. SMC Dungeon was definitely a good catch taking this entry right here. Did you keep on holding on, or I'm still in some, I'm still in with 0.25 lots of the total lot that I entered here with. So that point in time, that was around 4 points of risk. Mm-mm-mm, 15-minute time frame. Take a quick look at NQ. The last time we probably swept some short-term lows was right here at 740. Then we left behind these equal lows. I would have really liked if we would have seen this wick to be just a little bit more bearish, and actually sweep the short-term low, then I would have actually even considered adding to the position prior to the New York Open, just right here off this bullish fair value gap. But if we leave behind equal lows like this, just before the open, we could have also seen something similar to this, where we first of all have a Judas swing or a fake move to the downside with a similar V-shaped recovery right here. The probability for that was simply, too high for my liking. Alright, and we do leave behind a bullish value gap. Also note how we open up here. We open up with a bullish volume imbalance. And we just keep on expanding. The next fair value gap here on the 5-minute time frame would be coming in right here. Make sure we don't miss anything. Yep, NQ is almost at the previous day's high. Plenty of buy side laying around here, and a daily bearish fair value gap right around the 16,588 level. I'm going to take a paper trade here. I wouldn't recommend taking this trade at the high of the day. So it's just for the practice sake of the live stream. Buy limit is placed. See if we keep on using bullish fair value gaps as support. If we don't see it being used as support and we get the confirmation close below, then we could use it as inversion fair value gap, targeting short-term lows. For example, these equal lows right here. This short-term low for a retracement. Then we could see the opposite scenario where we get that fake out move to the upside first, hitting buy side, and then we get our retracement, at least for the AM session. So that's what I think could be likely. But we would prefer if this fair value gap is a little bit smaller, because then it wouldn't take us very long to get our invalidation or validation of this fair value gap. If it's, how big is it actually? From this high to this low, almost 5 points. I mean, for the New York Open and AM session, that's alright, but it's much easier to manage a smaller fair value gap in terms of risk. Alright, that's interesting. So now we retested our inversion fair value gap. Let's see if it actually ends up holding, or if we do get that quick decision, that fake out move to the upside with the potential dump. Let's see if NQ managed to take out that previous day's high or Friday's high. Looks like it just wicked it. Interesting. Let's see how this 5-minute candle is going to close. 20 seconds to go. Five, 4. That's also going to be a new 15-minute candle following this 5-minute candle. Looking good. Nice rejection here. We almost filled in this entire inefficiency, retesting our inversion fair value gap here. Let's see if we can continue further to the upside. Seeing if we cannot target the consequent encouragement of this bearish fair value gap. 5 points would be coming in right here. Let's also mark that up. As of right now, no reason to believe that we're gonna continue lower. As long as we keep on respecting these bullish discounts, we can just simply continue higher, reprice, continue higher, reprice, and continue higher. And Q ended up taking both buy sides. Yep, it did. Nice. And then Q now hit that daily bearish fair value gap. So it's good to be aware of that. We hit that buy side liquidity right here, here, and right here. Now we're inside that daily bearish fair value gap that we marked up on our outlook. Let's see if ES can follow. So I hope that really kind of proves the point of simply using fair value gaps to determine your bias. And of course, guys, there haven't been many questions yet. Please ask. Let's see what that trade is up to. I think we can let it run for another 50. And then that 100k challenge would be 2% in profit. You can't trade ES on funding pips, but you can trade the SP 500 CFD contract, Simo. That's what I'm doing. So it's not exactly the same chart, but it's, well, I'd say 95 to 98% the same. I don't have an issue simply watching the S&P 500 futures contract on my monitor, and then I have my phone right next to me. If I see a good opportunity, I check out how much risk that would be on the futures contract. Like here, for example, that would have been 6.5 points. If I enter with one lot, on my 100k account, that would be around 650 now. $500 worth of risk. I think so. I calculated in my head. Of course, you could also simply use the MT5 desktop app and use a risk calculating tool. I eventually will do that as well, I think at least. But I think for now, just trading on my phone, I don't see anything negative about it. I don't have to switch between the MT5 terminal and my TradingView application all the time. I can simply leave that app running and enter usually with my standard lot size, depending on my account size. So usually on my 100k account I enter with 2 lots, and on my 50k account I enter with 1 lot. Of course, you won't have that laser sharp precision that you would have with trading future contracts, where you set your very specific buy limit, you get filled. Like me, for example, right here, my entry actually wasn't perfectly on that fair value gap. It was somewhere around, I don't know, I bought the retracement of this candle. I already saw, okay, this is looking bullish. We respected bullish order flow. I don't want to buy right here, but I'm happy to buy on that retracement. So I added 0.5 here. Then that candle closed and I added another 0.5 somewhere around that area. Doesn't have to be exactly to the tick at this price level. I'm fine with getting my rough entry right around here and my exit on buy side and more buy side. And now I'm letting it run to see if I cannot squeeze something more out of that trade. Yes, SP 500. All right, let's see. We open up with a volume imbalance here. Go to the 5-minute time frame on NQ. We hit that daily fair value gap and reject it. Tap that one more time. Plenty of inefficiencies to eventually be filled in sooner or later. So we want to keep an eye out for that. Check out the 1-minute time frame here for a second. Retraced, bounced back up, formed a new high. Looking less bullish on the 1-minute time frame. Could be that typical double top formation or M pattern right at the high of the day. But we keep on respecting that lowest bullish value gap here, at least on the 1 minute. Let's see, we entered the trade based on the 5 minute time frame, so I don't really want to use the lower time frame to fade my bias and get out early. As long as we hold support on this 5 minute bullish, I'm gonna remain long. If I see the confirmation close below that, a early indication would be a close below the 50% of it, then I would start to go short to hunt some sell stops. So everyone that's long right now has got sell limit orders right here. Let's say I, for example, would place my sell stop right here. And eventually, I think they're going to be taken. Is anyone looking at some other charts than the SP 500 that could have a potential setup soon, like a nice 2022 model? I only focus on the SP 500 on my streams because that's what I trade, but I understand that traders out there also watch some other assets. For me, I like to focus entirely on one chart. But right now you're long on NAS. You were long on NAS, okay. I used to, but I don't think it's a helpful confluence for the short term. At least if I'm trading the S&P 500. I look at it on the weekend when I do my weekly outlook, and maybe at the end of the trading day to see, okay, what could the DXY be doing over the next 1 day or 2 days, and then see if it lines up with my bias for the S&P 500, if that would match up. But I wouldn't suggest you to have the DXY chart open if you trade indices, because it doesn't have that correlation that you would want to see. I would use it if I would be trading the Euro US dollar, because you really see Euro is going up and the DXY at the same time is going to the downside. And it's, I'd say, almost 99% of the time like that. Then we can really use it as proper confluence. But sometimes on the lower time frame especially, we see the S&P 500 moving to the upside while the DXY is moving to the upside. So it's not always that, 100%. Oh, I guess it hit my profit target. Yeah, profit target was hit. But I think you guys know what I mean. So for the short term, I don't think it's beneficial to know what the DXY is up to. But if you think it's a helpful confluence for you, at least on the lower time frame, then just keep on using it. I don't really need it. If I see my setup, like for example this morning, okay, do we get the confirmation that we want to revisit lower fair value gaps? We also had this fair value gap right here on the chart. Can we go lower and hit sell side? Okay, we bounce off the fair value gap right here, and now we got the confirmation close below. At this point in time, I don't care at all if the DXY right now also showed me a bullish candle, because only if the DXY shows me a bullish candle, I'm going to, or signals a bullish direction, I'm going short on the S&P 500. I wouldn't do that. The S&P 500 basically tells me what it wants to do, when it wants to do it, and I don't need another chart to confirm that. If I would be some sort of a, let's say, intermediate to midterm swing trader, then yes, maybe would be good to know what the DXY is up to. But I don't think future traders or index traders benefit from the lower time frame direction of the DXY. Might be an unpopular opinion. And our take profit target has been achieved with the 50% of our bearish fair value gap. Nice. Boom. As simple as that. And yes, sometimes it doesn't work out, and that's perfectly fine. We can't be right 100% of the time, but with a decent risk-reward ratio and good risk management approach, it's gonna, end up being profitable without having to stick to, I don't wanna suggest you to not stick to a specific model, especially if you are just starting to learn about ICT concepts. I think the best setup you could possibly stick to would be a very simple downtrend. We're somewhere at the low of the day, and then we get that sudden displacement at the correct time, like say for example London or New York open, get that retracement, we enter on the breaker block or a fair value gap for the continuation higher. That would be my go-to setup for a beginner. Or for example a inversion fair value gap setup. But like this, I don't really have to force myself to sit here all day and wait for a very specific setup to happen. I've done my time. I've spent enough time watching how the SP500 likes to move, and that's why I'm also only trading the S&P, because it tends to respect the fair value gaps a little bit more than the volatile Nasdaq 100. I know how to place my targets. Developed a good feeling for ES. But what was I about to say? I kind of lost train. In that play, I didn't enter on my funding pips account on that play. That's just a paper trading play. Going with the flow, simply assuming that if we continue higher towards the previous day's high, filling in this bearish fair value gap, well, I have a very high conviction that we're gonna do it from here. And just based on that, I can take an entry long. Of course, I would prefer if the fair value gap would be a lot smaller. Let's say we would have seen a wick like this, because then my stop loss also wouldn't have been all the way right here at this fair value gap candle low. Not that it's my specific rule. It's, I don't know. Stop loss placement oftentimes is based on, I'd say the experience, where I think that entire idea would be invalidated and where I would prefer to get out of the trade or get stopped out of the trade. So I don't enter this trade on my funding pips accounts. I would have deemed it too risky given the size of the fair value gap. That's why I decided to take on a paper trade. Did someone take it actually on their live accounts? I mean, risk was acceptable, but I mean, I already caught the short during London, and then I jumped in right here, roughly around this fair value gap for the entire long, and it also just hit my profit target with this last move to the upside. So I was still in a long the entire time, basically since we started the stream, all the way from down here. Yeah, Agent, you're one of those people that have an overview over the entire market. You took NAS, gold, and the Dow long. That's not bad. That's some good effort there. I'd be burning out if I would be watching all these charts. I think I do a much better job by risking a little bit more on one instead of spreading out my risk on multiple assets. I mean, yes, I guess it's kind of a fail-safe if only gold happens to run and NAS and Dow or ES don't run. But at the same time, well, it depends on your personality, I would say. If you always have been great with multitasking, then definitely that's the way to go for you. But you have to find that out for yourself. For me, it's definitely not. Not that I'm bad at multitasking, but yeah, I do much better if I put all my focus on one thing instead of splitting it. Of course, it helps with 4 monitors, but that's exactly why I only have one monitor here in front of me, because I don't need it. I see the benefit, but I also see the issue with it, especially for beginners. You have been doing it for a long time, that's why it works, so... Is that PL of your 250k account? Two proper accounts, okay. I see. Fair enough. Alright, what's the time? It's 10:05, so that last push actually was the opening of a new hourly candle. Let's check out what the hourly time frame looks like. Hourly time frame looks bullish. I think that previous day's high could be hit. We also perfectly rebalanced this bullish momentum candle here at 9:55, because the following candle here at 10 a.m. perfectly retested that previous high. Otherwise, we would have seen a potential inefficiency being left behind if we wouldn't have done that. That's what I call immediate rebalance. Immediately rebalancing a momentum candle, basically. So price delivering very efficiently. Doing that, it's usually a good sign or good confirmation for continued bullish order flow. If you get a volume imbalance paired with it, it might even be worth a high risk continuation trade into a very strong drawn liquidity. Let's see, we have 1 more hour to go within our timing window. Already happy with the profits on the 100k account. Only took this, I'd say, outside the timing window. Trade on the 100k account, not on the 50k. I only took that short here on that 50k. But following price, next thing I would like to see would be a close above our highest bearish value gap before we potentially take out that previous day's high. So a peek at Nasdaq. Nasdaq already pushed above that daily bearish value gap. That's a pretty dope move to the upside here. No news Monday. Sometimes on Twitter I see people, oh yeah, Monday say no news day. I don't trade no news days. I think that no news days tend to be some of those best trending days, and sometimes even Mondays. I wouldn't be too quick to judge these. They deserve more respect. I think on, what was it again? On Thursday we have CPI news, and on Friday we have PPI, if I'm not completely wrong. No, that's meme coin stuff. Forex Factory, there we go. Thursday CPI news and unemployment claims like every Thursday, and Friday PPI news. Yep. Did anyone take this trade long, even though I, suggested not to? Maybe with micros. If not, that's also perfectly fine. And sometimes I draw these things up and it looks like we actually had the fair value gap look like this. This is how you could, like, really fake screenshots if you would want to. Fair value gap was much bigger. So we have filled in that highest bearish fair value gap. We have nothing above here. Very similar trade here that we took post NFP session compared to what we did today, where we just used that highest bullish fair value gap right here, waiting to see if we're going to invalidate it. If we would have seen a close below, we exit, but we simply used it to continue higher. So we've been on a streak on that paper account, and I think that's also something that most of us likely could change. Actually being proud of your paper trading results, keeping a track record of what you do here. I enjoyed initially, or I don't want to say initially, but for a long time I've been like, oh, paper trading account, screw that. You don't make any money with it, but well, now I would say you gain valuable experience without being hurt. Doesn't mean you should always paper trade, but if you, for example, you want to keep on trading after a very successful trade, I would suggest you to jump on your paper account. You can keep on trading without doing any damage, lock in your profits. Most of the time that's second trade after a good win. Usually, doesn't have that same quality. Most of the time we're just chasing even more. Or maybe we made a mistake. You could consider it, your practice account or your laboratory before before medication goes live. It also has to be tested. But traders are kind of ashamed, or they always get shamed if they use paper trading accounts. I mean, I have no issues sharing my stats on my MT5 funding pips account. It's not that I try to hide anything. I mean, I keep posting all that in the tape reading and VIP chat. I just don't like switching between MT5 and TradingView at all times. And also because I don't like the MT5 interface. You can't really zoom in and drag the chart around. I don't know, I don't like the charting over there. Let's see, check out the 1 minute time frame. We could go over to look at a few different charts. Are there any suggestions, guys? Feel free to share them. Take a look at euro, oil, gold, whatever you want. I've been keeping an eye on NQ. Let's see what we're up to now. So since the New York Open, already expanded 140 points almost. We're above our daily bearish fair value gap. So a pretty bullish opening range. Let's actually see what, let me hide all my drawings here quickly and turn on that opening range gap. Oh, that's a gap. 1 second, guys. Alright, sorry for that. Regular trading hours opening gap, yeah, that's where we left off. Filled it in partially, so that's basically where we closed yesterday at 4 p.m. And that's where we opened up. So if we were to look at the regular trading hours, that would be exactly this gap. Just shown with a box via the ICT all-in-one indicator. Wanted to see if it's bigger and if we have a gap that we could potentially end up filling here with all these short-term lows that are still in place. We don't have a new bullish fair value gap that we could use to frame higher prices really right now here on ES. On NQ, we kind of have plenty. We never actually retraced into a bullish fair value gap that we left behind. If we look at this, 930, 935, 940, 945. Had a volume imbalance. We didn't even bother filling that one in. Continue higher and higher and higher. Now we have those first two down closing candles on the 5 minute time frame. Check out the 1 minute. On the 1 minute we would have seen some decent entries here. Keep on making higher highs and higher lows. I think potentially we could get that short-term retracement and would simply be following market structure and look for that shift, that change. Always presents opportunity to maybe try to target some of the short-term lows for a retracement. We will keep an eye on NQ. NQ and ES are both on my watch list. As you can see, we also didn't close above that bearish fair value gap, and that's just that precision that I really enjoy, and also that's the reason why I trade ES and not NQ, because ES is just so damn precise. We close right at the high and we reject from here. We didn't close above it, making it hard, giving us a hard time to read price. Actually, it's making it easy. As long as we don't close above here, we don't expect this newly formed inversion fair value gap to hold support. Let's take a look at gold here and see what H. Smith was up to. 5 minute time frame. A nice double bottom formation, but that would almost be all. Also, not really easy to get in with the trend here, unless you simply jump in with the market. But even in terms of fair value gap entries, inversion fair value gap entries, or even volume imbalances would have been pretty tough. 15-minute. Kind of in the middle of nowhere here. But in those inefficiencies here, let's see what it looks like on the hourly time frame. We cleared the slow, hit our FOMC fair value gap, and started to bounce back. And we see a nice double bottom formation after we hit sell side liquidity, that hourly low. But still, entry-wise, this would have been rather tough. I mean, the only thing that really stands out to me here would have been this bearish value gap. But we can see that, yeah, fair value gaps aren't really being respected as well as we respect them on ES. When we close above, then we close back below, then we use it as resistance to deliver lower. We take out sell side one last time, at least the short-term low. Then we bounce back and have another tiny little double bottom in here before we shift structure. Then we close back above it and actually use it as support now to continue to move to the upside. But still, yeah. Not the best setup. So let's take a look at EU and see what the currencies have been up to. Think you didn't form a higher high here. No, it actually left behind perfect equal highs. That's interesting. If we would have seen a wick above that, could have argued SMT divergence at the current high of the day, but we didn't yet, so we still keep an eye out for that. EU was behaved. The chart looked almost, identical on Friday, so let's see what it looks like today. 2 a.m. Perfect, actually. Nah, almost perfect. We have buy side right here. If we would have seen this wick above buy side, we could have argued, okay, we swept liquidity. Then we shifted market structure. We closed below the short-term low with a higher low to the left and a higher low to the right. We close below that. We leave behind inefficiency and another inefficiency right here, paired with a inversion fair value gap right here. Take out the short-term high. We only wick it, and then we continue lower from here. So almost a perfect 2022 model that checks all my boxes, except for us not taking buy side. So I would have just used a little bit lower risk. We still kept on respecting this bearish value gap, which is nice to see. So a nice internal 2022 setup. Right here. Then we also sold off, very similar to what we saw on ES this morning. Let's go back to the 5-minute time frame. Right here, the sell-off, but with a nice 2022 model right here on EU. Kept on using bearish fair value gaps to continue lower. Right here, bearish fair value gap. Continue to push lower. Then we eventually took sell side liquidity. Had it lower one last time. Then we also had that strong bounce back up. Closing above this high. Shifting structure, holding support on the highest bullish discount, going sideways for a while here, and then around the 8:30, 9:30 open continued to move above buy side liquidity and the high of the day. So once again, similar to what we see on ES and NQ, but without the momentum after the New York Open. So 9:30 opened up right here, and the EU did move to the upside. But yeah, it's nothing compared to what we just saw on NQ, for example, or on ES. On ES, we moved a total of 16 points, and then in Q we actually moved over 140. But still a pretty good opportunity. Let's check the higher time frame and see if we also had, yeah. Very similar, do you see that? So on ES, heading into the weekend, we talked about the 1 hour bullish fair value gap to potentially hold support. We also covered that in the weekly outlook. We could have simply copied that if we would have looked at the Euro US dollar 1 hour time frame. And then on the lower time frame, all right, this is looking like a nice displacement back to the upside. Let's try to see if we just filled in this entire hourly fair value gap and now continue the move to the upside. If you have any questions about that, about that, feel free to ask. Like I said, that's what I'm here for. I don't see any clean opportunities that I would feel confident taking myself on the funded account or on the funding pips challenge. It is 10.25. So we will see if we get that last push to the upside with that new 15 and 30 minute candle here coming in at 10.30. It's either going to be that or we're going to start to retrace at 10.30. I kind of, I don't know, I see that it's common for ES to reverse directions completely at the 30-minute mark of the hourly candle. So let's see how this candle is going to close. If we get to close above, we could try one more time with a paper trade of this inversion fair value gap to target that previous day's high buy side for one last push to the upside. But we still have 3 minutes left, so let's actually look also at oil. 5-minute time frame. What did we work with this morning? Oil just likes to run in one direction sometimes. New day opening gap right here. We filled it in completely, and from here on we just kept on selling off. Then beginning of the early London session, 2 a.m., we start to retrace a little bit. London open kicks in. We form another higher high before we get our market structure shift. We did not see a nice 5-minute time frame bearish fair value gap. I'm also not an oil expert. I'm only watching it or looking at it occasionally, but also with a decent sell-off. $7 a.m., 8:30, 9. Continuation lower, yeah. I don't know, I don't really like the price action. Sometimes it's nice, but I think I get that consistency that I need at least. I wouldn't see that with oil. And it's not worth dividing my attention and my focus. Here, for example, I would have seen a nice 2022 setup just towards the end of the London kill zone. Continuation lower at the low. I also could have argued that we accumulated here. I think we actually looked at that. Accumulation, manipulation, reversal slash distribution that kept on going to the upside. That looks familiar, yeah. Let's see what Bitcoin's up to. Not that I'm not using Now let's actually focus on the S&P here and see if we get to close above. Keep an eye on NQ. I think Q is also forming that higher high. This is going to be a paper trade for me only, I think. Yeah. Do we get to close above? Yes, and that moved too quickly for me to even enter with the market. So see that new 15-minute candle, how immediately we get some more momentum, and that momentum continuation we just spoke about. New 30 and 15-minute candle. We closed above. I wanted to get in on the long at least with the paper account, but it moved so quickly, it would have thrown me in right up here. But now we actually have the inversion fair value gap, and we have our drawn liquidity being the previous day's high. NQ is also following. We do not see bearish SMT divergence at the high right now. I think this might just continue, at least for now. Close above that highest bearish value gap. And that's our next best fair value gap that we could use for potential resistance, because that's the area of resistance that where we rejected from on Friday. That bearish fair value gap, so I think it might be worth to draw it in, even for where we're at right now. Did anyone take the market order, or maybe was someone quick enough to jump in with the market once we close above this? Nice. Good job, Simon. Simo. Good job. The 3-minute time frame. Don't even have that as an. Nah, that's why MIC. Yeah, YM look clean with that immersion fair value gap breaker block. Little internal 2022 model. Yeah, we can actually take a look at Dow Jones. Not keeping track of that at all. Like I said, I like to put all my focus on one. YM1. Oh, okay. 930. Continued lower back into the range. Didn't even take out that 3:40 a.m. high here. So YM kind of has been doing its own thing. We saw that sell-off during Asia, also on ES, right here. Then we went sideways. That's how we got the idea of the potential accumulation. manipulation, reversal distribution idea here on ES, accumulation, manipulation, distribution / reversal. And on YM, we were really, lacking behind. And what Simo just shared on Discord is this nice setup right here where we form a lower low, lower high, lower low. We shift structure, use those two up closing candles as our breaker block or mitigation block. Before that, we made sure we clear sell side. We had even a inversion fair value gap right here. We closed above that bearish fair value gap, so we already had the first clue that we might not going to continue lower into our next sell side target. And we already saw Nasdaq and ES really continuing very aggressively to the upside. And then it just happens that we get our market structure shift bullish, paired with a breaker block, paired with a nice inversion fair value gap, kept on holding support on that breaker, continuing to move to the upside into left behind buy side liquidity pools. Nice setup, good catch. Next buy side draw. These relative equal highs up here, we just tapped that. Then we also have our new day opening gap just over here. And once again, ES is closing perfectly to the tick at the high of our bearish value gap. Not above, perfectly right at the high. And out. Let's switch over here to NQ. Yeah, a nice little scalp. Still waiting for ES here to hit the previous day's high. Once we hit that, I'm gonna wrap it up for today's session. Unfortunately not with too many opportunities, at least on the 5-minute time frame. On the 3-minute time frame, I'm sure that now, of course, if we break it down to lower time frames, you can always find an entry opportunity. But for me, I found that, simply sticking to one time frame where I look for entries, having my higher time frame bias in mind. I shared that yesterday on the weekly outlook with that 1 hour bullish value gap, which was confirmed with this potential accumulation, manipulation, distribution setup that we saw towards the end, or post London's kill zone at least. Of course, if you really want to, can always find an entry if you maybe even drop down to the 30-second time frame. Some people or some traders are doing that, or the 3-minute, 2-minute. Can always find your entry based on ICT concepts, or even if it's not based on ICT concepts. If you look for an entry and a reason to go long, you can always find it. But for me, it boils down to that exact same point where I'm not really interested in. Well, sometimes even I drop down to the 1 minute, but I'd say the majority of the time I spend on the 5-minute as my entry time frame. Because sometimes you don't really get that 5-minute delay or 10-minute delay where price is waiting for you until you finally place your market order or your sell limit order to get on with the trend. And if I don't pay attention to it because I'm skipping through time frames or skipping through charts because I have 10 tabs up open here, oh, what's gold doing, what's the US 30 doing, what's oil doing, you get the idea. Probability of me missing clear confirmation that we're gonna head towards sell side, chances of me missing that would be much higher than without having all these tabs open. But I'd say I think that's unique to my approach. And because I just like and understand how EOS is moving over all that screen time, or over all that time that I spend in front of the S&P 500, I'd say that if you only look, let's say, for example, I bring it up again, for that perfect 2022 model, and you don't happen to see it, or even, you don't see the possibility of it even forming up anywhere inside your timing window. Of course, looking at maybe 2 or maybe even 3 charts at the same time could be helpful. Maybe you spot it on the Euro US dollar or on oil. Then you just, pick whatever chart looks the best. Instead of, trying to force it only on the S&P 500. So I'd say it really also depends on your approach. If you only look for that 2022 reversal setup, are there any questions, guys? There haven't been many questions yet today, so I'm curious. Either everything is crystal clear and there are no questions and I'm explaining it very well, but please don't be shy to ask anything, because we're getting closer to the end of the live stream and the end of the New York AM session. Let's see if we hit that previous day's high. I think we did a pretty good job today, at least during the London to rollover session between London and New York. We caught the paper trade long here into that bearish share value gap, the 50% right here, with our entry of this bullish share value gap right there. But we really haven't been offered a better setup than it after the New York Open. That's all the price action that we basically got. One bullish share value gap, we took advantage of that, taking the long. But besides that, unless you already have been positioned for the long, for the movement to the upside before the New York Open, then the chances of you missing out on this move were rather high. Or you maybe drop down to the 1 minute time frame and look for an entry opportunity there. That's also an option. But even on the 1 minute, I mean, all this price action right here, I don't know, it would kind of throw me off compared to the 5 minute time frame, where we just see volume imbalance at the 50%, gap above, holding support, continuing higher. I know it cuts out much of the noise, or the majority of the noise, in my eyes. Still no questions, but I'm cool with it. So tomorrow we also gonna do the tape read early in the London session, like always on the tape reading channel. The live stream is gonna start tomorrow also at 9:30. We, like today, don't have any news coming up. I will make sure to post an update inside either the VIP chat, Twitter, or tape reading. I'll let you guys know and ping you for a little outlook heading into Tuesday, depending on how the PM session is going to play out. I think eventually we're gonna get that retracement slash, I would call it retracement, until it's a confirmed reversal. I mean, we're just moving away from a reversal setup right here at the low. This would be your, let's say, intraday smaller picture market maker buy model, where we have sell side of the curve paired with the accumulation, manipulation, distribution, where we could have simply bought every of the bullish inefficiencies being left behind. If this would have been just a little bit smaller, I would have also taken that long play on my Funding Pips account, but since, or my 50k account, but since I've already been positioned on the long from here, taking some partials right here at London, Asia, and the final take profit target inside this bearish fair value gap, I already felt pretty happy with my results for the day. Let's see, can we get that last push? It's 10:45 now, so also a new 15-minute candle. Perfect. Even on the 15-minute time frame, a perfect rebalancing of that 9:45 a.m. candle. And on the 5-minute time frame, consolidating just below buy side liquidity. I can imagine that many traders out there are patiently waiting. It might be 1 or 30-second time frame for that reversal, because all they can think about if they see price going up aggressively is, oh, reversal, when's the reversal gonna come? Reversal now, reversal, 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 instead of taking advantage of the move to the upside. I know, because I used to be one of those. Not that there's anything wrong with it, don't get me wrong. I mean, eventually we're gonna retrace, and then I would simply partial out below each and every short-term low with a higher low to the left and a higher low to the right. So right here, 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 and here. Here we even have perfect equal lows back to the midnight level. In terms of a retracement, I think it's always a good measurement to check the PD array, premium discount array, measured from the high of the day. Let's say we expand a little bit more before we maybe get a 11 to 12 a.m. retracement, looking for some sell side in a discount before we eventually continue higher throughout the PM session. It's very likely. We have a tiny little bullish value gap here. But if we get to that inefficiency first before we take out buy side, let's see. The long could be possible, but I don't think that's really necessary. Another bullish fair value gap just below it. Now we'll just be waiting for buy side to be taken. Yep, there we go. 10:45, new 15-minute candle. Same way where we mentioned that, okay, let's wait for this 5-minute candle to close. We closed above our bearish value gap right here from Friday. And what did we get with that new 15-minute candle? We said it's either going to be the start of a retracement, because it likes to turn around at the half-hour mark, or a quick expansion. But that's usually where new momentum starts to come in on the SP 500 at least with that new 15-minute candle. So I always make sure I also, stay aware of the time it is right now. 10:35, 10:40, 10:45, new 15-minute candle opening, and now we're expanding again. 10 a.m. or 9:55, 10 a.m. That's also a new 15-minute candle and hourly candle. All we do here mainly is retrace, deliver efficiently. 10:10 and 10:15 we start to turn around again. 25, 30, new 15-minute candle, we expand. 30, 35, 40, 45, new 15-minute candle, and we hit our final buy side target. Nice. So guys, are there any questions about today's price action? You want to share any trades or maybe some losing trades that you took? There's nothing wrong about that at all. Otherwise, I'm gonna wrap it up here and call it a trading day. Gonna wait for a little while and then we see if there are any more questions. Otherwise, watch out for the update later on today. On the Discord, I make sure I ping all the VIP members. Otherwise, I think we mentioned, or we at least caught this entire move to the upside. We forecasted it. I got out right here, so missed a portion of it. That's okay. Scaled out of the position at London, Asia buy side, and right here at highest bearish value gap. Doesn't look like we have any more questions. Alright guys, then I think I would wrap it up. Like I said, that would be the best opportunity to ask me to take a look at a different chart. Otherwise, I would assume that everyone's happy with the first trading day of this week. Looking forward for tomorrow. Alright, then we're gonna leave it at that. So guys, thanks very much for joining in today. I appreciate it. And we will be back tomorrow on Discord like usual. So until then, take care. Make sure to enjoy the rest of the day. We spoke about it earlier in the VIP chat, and I really liked that discussion. I think I had it with Bongo Rambo 23. What did he say again before we end the stream? I forgot for a couple of years that there is something besides trading. I guess most of us did. It's definitely not useful, but maybe necessary. It's a reply to my statement that I wrote. Remember, we started trading to have more time to do the things we love and not to spend the entire day in front of the charts. That's my quote for the day. Gonna leave it at that. I'm going to enjoy life now again. So until tomorrow, take care guys, and